She
Mm-hmm.
had to have known that there was going to be a huge turnover, but she's not incentivized to tell people that. The turning point is signified by people projecting their analysis of the future indefinite. A neutral market goes up. So like this doesn't look particularly bullish to me. It doesn't look like anything. When a pivot occurs is usually when a crash occurs.
We're going to see a huge wave of bankruptcies of these zombie companies.
We fuel everything with a bunch of credit and print a bunch of money to create all the growth, and then you pull the rug out every once in a while and see what a mess everything is, and then you print some more money and you rebuild from there.
We're going from a nation of ownership as citizens to a nation of creditors and debtors.
Because the only thing that's going to be of value in the future is probably attention. You know, that was the whole. That was my 10-year plan with creating content.
All right, so let's go into our current fitness journey.
You look like you're in Italy or something right now.
Really?
Yeah, you really do.
All right, let me go get my mafia gear on then.
Is that right?
Get my rings and all that shit. Get a suit on.
Oh man, so we had I guess for the viewers, we had another cancellation, which is a bummer, but it happens. The show goes on. Some of these fund managers have to worry about compliance and stuff, and then they want to come on, they want to talk, but then their compliance team shoots it down. It is what it is. They're worried about legalities. They're worried about breaking some laws, and
it's like they don't want free advertising.
quite honestly, yeah, quite honestly. But I mean, I tried to start a company helping some of these institutions get better at social media because they're terrible. They're horrible. They're all outdated. Most of them suck at it. And
absolutely.
Some of them will message me and say, well, the demographics are so young, or why would I do this? And I'll be like, look at Kathy Woods, look at Ross Gerber. Like, they're not even close to the best. Yet they have massive funds with tons of money. Why? Because they make videos, because they have the public eye and interest. It's huge. It's huge.
Oh, absolutely. And these smaller name guys, they can use all the help they can get right now. I think it was in the Journal or JP Morgan article or something, but ETF flows are just down something like 30%. It's just incredible how much capital outflow there are in funds right now.
Yeah, well, it's so funny because every manager is probably dealing with this right now in a tough market environment, extremely tough market environment with some crazy extremes as well that we should probably talk about. But every broker or manager I talk to is like, I lost this and this client, but then for every client they lose, they have another one coming in, and they just kind of shift hands on, like, this person was mad because the market's down and they're upset. And in some cases, they just want someone to blame for what's happening, and then they'll go to someone else who probably has similar performance, probably holds the same exact things, but these people don't know that. And so they'll just bounce around aimlessly and feel like they changed something or fixed something or took control in some way of what was going on. But market's out of your control. What are you going to do? It's rough out here. So I find this to be a really tough market environment right now, especially past week or two. It's been really rough for trading.
Absolutely. And, you have this mindset of, like you said, this guy, it's a different guy. I can blame this last guy for losing me all this money. But at the end of the day, it's the illusion of diversification and the illusion that they're going to be doing something different when all the funds are buying the same 5-10 stocks. There's no difference. It's just about timing the buy. And sure, stocks are going to go up, but also go down. And if you sell out when they're down and buy in when they're down and expected to go up, are you really going to have much of a difference in portfolio performance, or just the illusion of the difference by switching managers?
And then you get people like Kathy that know, like, she knows she shouldn't be holding tech. She knew in 2020 and 2021. There's no way she didn't. She
Hmm.
had to have known that there was going to be a huge turnover, but she's not incentivized to tell people that. Just like all of
That's the
them are.
challenge, though.
Yeah.
That's the
They're
challenge with ETFs.
yeah. And I just can't imagine being in that position where it's like, damn, my perspective gives me no flexibility and I know tech is going to crash and
Hmm.
I just have to sit here and eat it. I just have to sit here and just eat it. And so I'm gonna say whatever it takes to get people not to sell out of what they bought into on the dream, on the idea of like
Hmm.
the lower this goes, the more money we're gonna make. You
Exactly,
know,
exactly.
better deals
And
there
that's
are.
that's the hard part, man, with Kathy Wood. What was the other guy? Is it Tom Lee? Yeah, it's
Maybe.
Tom Lee. It was Tom
Okay.
Lee. But yeah, that's the problem with a lot of these tech guys. It's a very, I guess, focused economy to where long term you expect tech to kind of regurgitate, get rid of the lower quality names, bring in new quality names or higher quality names. And at the end of the day, you're just changing the label. Like back in the .com bubble, you slap .com at the end of the name, and suddenly it's sexy. Suddenly it's the hot stock, no
Yeah.
matter what industry it's in. In China, same thing with semiconductors or electric vehicles. You have Evergrande getting into the electric vehicle business. You have a property developer in electric vehicles and semiconductors. What the hell do they have to do with either of those? And then, today it's AI. Slap AI in the mix, say it on your earnings call, throw it in your 10K, and now you're a sexy company again.
Yeah. What was the meme someone posted in the Discord? It had me cracking up. Let me pull this up real quick. Yeah, someone posted and said, "Hear me out. 3D printed cannabis using quantum computers powered by semiconductors, all managed by AI."
That's a
Like,
sure home run right there.
there we go. You
My God.
hit all the keywords. Now just add some
All the
stuff
keywords.
about going green and ESG in there, social governance, and
Oh yeah,
explodes.
get your
Yeah.
minority inclusion, get the whole 9 yards in there, and yeah, you're a winning firm right there.
Boom. Billions of dollars. There you go. Overnight. No business
We have the
plan, no idea, no prospectus, nothing.
No,
Just
not billions of dollars. We have the potential to make billions of dollars by 2027. So far, revenue is zero and probably going to be for the next few years. But 2027, that's a hot
yeah.
spot.
Yeah. Get
Let's
in
just hope
early.
interest rates don't crush us. Oh,
Crazy.
and by the way, we're going to fund our operations with stock issuance. So if you're worried about dilution, it's don't worry about it.
No big deal.
No big deal. We're just raising capital at your expense.
So um I wanted to ask you like, and maybe I could start if but on our podcast that we've done so far, we talked to some really smart people. The Doomberg one definitely stands out in my mind, but also there's a lot of wisdoms from Tony Greer. Like what has been your biggest takeaway so far? How do you think what did you think of that?
No, yeah, absolutely. And Tony Greer's discussion absolutely more tailored to your expertise in trading. Doomberg more geared towards mine and analysis. But it's very interesting how and I listen to a lot of podcasts. I think we've talked about this at the gym during our workout sessions, but while we do our cardio, whether it's 20 minutes, 40 minutes, whatever, I like to throw in a podcast, get some education going while I'm doing some mindless activity. It's a great time to just catch up on the news, catch up on current events, catch up on what other analysts are looking at. And the discussion with Doomberg, despite the name, wasn't necessarily all doom and gloom. Now, we did talk about some doomsday scenarios in there, but those are absolutely the absolute extremes that can potentially happen with a lot of this energy transition uh, mindset. And I thought I think it's just very interesting the macro perspective that he takes, the approach he takes to where he's not a fund manager. He's not necessarily looking at individual stocks on that basis, but more so looking from the top down at the macro economy and then kind of metastasizing that into an overall investment thesis on how you can put your money to work on these long-term mega trends.
Yeah. And I liked that. He's even more, and I had already known, because of course I've consumed Doomberg's content, that he was more positive and wasn't all just doom and gloom. But I was kind of surprised to see to what extent.
Mm-hmm.
And I was also surprised to hear him talk about being willing to debate, because I don't think I've ever seen Doomberg debate anyone. Um, and I think that would be fascinating to see
Oh my
him.
God.
Yeah,
I'd be scared to debate him. I'd be shaking in
terrified,
my boots, man. Yeah.
terrified. And being so new to this, I was even skittish of pushing him on a few ideas. Listening back, there were definitely a few things I think I would like to delve deeper into, such as the demographics in China, which I still, even given his insights there, I still would give some pushback there, because there's kind of conflicting data, and I feel like he might have cherry picked that one a little bit. But it might not have been a cherry pick. He just might have had more information to divulge, and we didn't push him enough on that. There's small things like that where I'm like, okay, we need to. If I'm better prepared and know I'm going to bring that up, or even think it should come up, we should have that written down. That's just being new to this, Um, and I also, no one will know this, but I was actually about to redo a video on China, because I had done one before the Doomberg podcast, where I said I think a lot of this news might be overblown. This will probably be nothing once again, and then more and more and more and more news kept coming out, and I was going to collect that all together and do another video, and then kind of say, okay, I'm kind of feeling like I might have missed something here due to the amount of influx of news that's coming out, and these new things. And then we talked to him, and he kind of agreed with me, and I got that confirmation bias, and then I never did the video because of
and just to
that.
be and just to clarify, he did make it a point that he's not a expert on Chinese geopolitics.
Yes,
So
yes,
the limitations of his analysis and what he brought to the table comes from that basis to where and I can say that anybody in the Western world, it's pretty much impossible to be an expert on looking at China as a country in which they kind of sort of have this iron curtain of data that's actually happening within the country and what they present to us. And we have to kind of keep in mind that they have this perception to their citizens that we are the all knowing, the all power, and we have your interests in mind, and we're here to better your lives, like migrating the citizens from their farmlands into these big mega cities and these big mega towers to bring up the middle class. That was to further develop their lives and benefit them in the long run. And without that perception, the belief that the Chinese Communist Party is, what's the proper word, solvent or legitimate? There we go. The belief that the Chinese Communist Party is legitimate may be questioned if there were any cracks in their long-term growth policy.
yeah, yeah. And I think it's also different to actually go there, because I was lucky enough to go in 2018, and I mean, just my immediate thought. I spent a month there. I went to Beijing, Guangzhou, and Xi'an. The biggest city, Xi'an's former capital, Beijing. Guangzhou is basically like their Miami, Florida. And I mean, American cities are dirty for sure, and dense. Like, I've been to New York City, very dense. It's still nothing compared to Beijing when it comes to dirty and dense. It's still not
Oh
even
God,
close. You know,
it's like
uh,
it's like they're towered on top of each other in those micro apartments. I'd be,
yeah,
God, that's just no way to live. I like my space. Every couple years I've moved up into living spaces, and just to consider that, I'd go from what do I have now? A three, basically two living rooms, a giant bedroom, and a kitchen, to basically closets to downsize. Because I'm from Texas, you buy a lot of land with a little bit of money.
Yeah,
And then moving to St. Louis, it's kind of similar to where things are still relatively cheap. A lot of the homes are a lot older, so they're more spacious and open concept. And then you go up to New York where you're in a cracker box for 6 grand or whatever it costs out there. But
that's
just
crazy.
going from there to China, it's like that would be
Yeah.
that's
Well,
that's not a living style I'd want.
no, well, and even just what I was going to further elaborate on is this the pollution there is
Mm,
and the quality of living. Here masks are weird. There masks weren't even weird in 2018 before the virus came out, just because the air quality is so poor. And you go to somewhere like Guangzhou where the weather's warm, palm trees, and I mean the world's third largest tower is there, and there's no point even going up in it because you can't see
no
anything.
visibility.
There's no visibility.
Oh my
So
God.
we were talking to our guide about it. She was like, "Yeah, there's not really any point to go up there because you can't see anything." I was like, "That's horrible," you know. Outside of Xi'an's, all these factories and stuff too, and it's just like we have some flaws. Vegas, you could see some fog and stuff. But I remember when we went to the Great Wall and I was looking at the view and I was like, wow, you can see the fog even out here. Or there's, we had to drive out here. It's kind of
Oh
like
yeah.
going to a national park. There's not really anything close by except for this giant wall and this landmarker, which was really cool to see a piece of history like that. And China has an amazing culture, but it's still so foggy. And she's like, "Oh, it's a really clear day for you guys." I'm like, "This is what clear is? Holy, holy cow!" Yeah, it's just wild. I don't know. It's different. It's real different. There's also the differences. This is gonna get too far off topic, but the one thing else I'll say is the big difference too is that here, and I think it's just the cultural change and just one of the phenotypic examples of the genetic differences in the culture is represented in how you are treated as a pedestrian walking across the street. In China, cars have right of way. If a car hits you because you're in the street, that's your fault. What the hell are you doing? I remember her telling us like that. Like, don't ever try and like cars, people don't have right of way. In the US, you're
Huh.
supposed to stop. In China, it's a complete. Oh, I saw so many people get hit by a car while they were on their bike. It
Oh my
was
God.
it was crazy. And I was there for only a month. The dude just gets bumped and he just gets back on the bike and goes like, "You dummy." This is the way that it's
Jesus.
treated there. And it's just wild. It's just wild.
I don't know,
It's
man. I went to
different.
South City Schnucks a couple weeks ago and I nearly got run over a couple times just crossing the parking
Yeah,
lot. I didn't get
true.
hit,
Maybe I don't
but
have
it was
maybe I don't have quite enough experience in cities. Maybe that's what it really is. You
yeah,
know.
you're a county boy out there, man.
Well, I've been to big cities though. I'm not too far from the city. I stay close. I like a house, man. I pay so much less than people with apartments,
Very
you know?
true.
Yeah.
Very
And I have
true.
I have so much space. I'm all
Speaking of
office.
apartments, though, I saw a very interesting article. Let me pull it up in the Wall Street Journal this morning, talking about kind of how you can invest in different properties, just given the current market dynamics. For example, just the headline numbers, it looks like between remote working, office space, and aggregate, office spaces have lost 31% of their value since the Fed started raising interest rates. Let me find that figure for
Wait, this is in residential, not commercial?
this one's commercial. This one's for office
Okay.
space.
I was gonna say,
Let
okay,
me
you said office space. Sorry. I missed that.
Yeah, let me scroll down to multifamilies though, because that was pretty eye-popping as well. Give me 2 seconds
Yeah,
here.
the destruction and we were talking about this at the gym some, the destruction and the turmoil And the corporate office space is severe, especially in areas like San Francisco. I've heard some real estate guys tell me that it'll probably take decades for that to be fixed, because it takes literally like a cultural change. And
Hmm.
you hear some people say that that won't ever come back because it's just a different world now. The COVID leap forward is going to have most people working from home, and it's no longer practical to continue to have these large office spaces, or at least to have them so large. So most companies may downgrade. I don't know. It's an interesting thought. I think there's some middle ground, probably. I don't know if any of the extremes really hold up. I don't know if it'll never come back, but I don't know about the some people who say it'll come back quickly and people will have to go back to the office. There's probably some in between, um, where the maybe still have offices, but they downgrade, but it will probably still take some time to even build that back up, and it probably will never come back to the way it was.
No,
Yeah.
absolutely. And that's the scary part. You hear all these tech firms, they have these, and that's the thing to where a lot of office spaces, they're not bought on a year-to-year basis. The leases are not bought, but they're not leased on a year-to-year basis like apartments. They're leased on what, like a 5 to 10 year term. So what I was told during like the 2020 2021 correction was a lot of firms began subleasing a lot of their space, which continued to remain empty. And now, as leases roll over, what is it, 23? I think, if I remember correctly, it's been a couple years since I've touched up on my analysis, but a lot of, I think it was somewhere like 25% of leases are going to be rolling over in the next year or two. And I can't imagine how much downsizing is going to occur during that period and what it's going to look like on the other end. And on top of that, just looking at the whole idea of um, lease inflation, if that's the proper term, but just comparing overall inflation to how much can leases increase from here, I'm not expecting them to be able to keep up with inflation at this point. Just considering how much downsizing is going to occur. So, as far as investing in office space right now, we're still in the early innings of downgrades, of delinquencies, of bankruptcies, of trading these spaces. Like, from what I read in that article this morning, there's a 2% dispersion on the asking price and the selling price for these buildings still. They're trying to sell at a 2% higher rate than what's being asked. And honestly, I still think that's pretty high
Yeah.
as far as what's going to be expected in the next couple of years.
Yeah, I think that's normal. Now, I'm no expert in real estate, but I feel like, or I've heard that was what happened in '08 too. Even after the crash, it took a moment. It was maybe not in '08, maybe '07 and leading up to it. People were still kind of in
Hmm.
denial of how much prices were going to come down. And then lots of people end up selling the bottom, much like the stock market. Where, they wait and they wait and they wait. The more they piddle around to sell, the lower and lower and lower it goes. And then boom, by the time they finally admit to themselves that the market has crashed, it no longer has the value they think it does, they're selling the bottom.
Oh,
Just like
well,
the
that's
stock
the problem
market.
too. Office buildings, it's not an active liquid market like stocks to where
Yeah.
you almost, I don't want to say you're guaranteed a buyer, because in a crash you have no buyers, you only have sellers, and that,
Yeah.
so you have that cascading effect. But in this case, you only have negotiated terms on a private deal, and that's going to be a monster of a challenge coming up to where it might not be done being repriced. So, and on top of that, you wouldn't sell. So let's say, we're a real estate firm, and we own X amount of office buildings, and we're looking to exit them now, and we can't find a buyer at the price we're asking for. So we're left to hold these spaces. Now we're leveraged up to our ears, holding these probably on floating rate loans. And as they keep adjusting higher and higher with the federal funds rate going up, what's it at now, like 5.25 to 5.5, and expecting another increase or two throughout the rest of the year, and expecting higher rates for longer, as Jerome Powell would suggest. Whether you agree with that or not, you know, you won't know until you know. But, just with that in consideration, it may not be up to you as to whether you can still hold that property. Because at the end of the day, you need to make those payments, or it now it now resides in the creditor's hands.
Yeah. And that's the last thing the banks want too.
Mm-hmm.
They don't want to own a property, commercial or residential. They don't want to foreclose on a home. They don't want to have to deal with that. That's not their area of expertise. So,
But like for BlackRock, Blackstone,
mm-hmm.
for Starwood, for those guys, I mean, that's their bread and butter. And if they can get a property on the cheap, they'll more than likely jump on it.
Yeah,
And
I wonder, sorry to interrupt, but I wonder
oh
if
yeah, go for it.
some of these pensions that have been going around buying properties and stuff. We saw even Zillow tried to go out and buy properties and end up getting slaughtered for it, taking
Yeah.
huge losses on the books. I wonder if these
Was this a
pensions.
couple years ago?
Hmm. Yeah, it was
I
a couple
remember
years
that.
ago now. Yeah, yeah. And I wonder, I never heard any news about all these pensions in different institutions, financial institutions that suddenly ventured out to real estate during the 2020 days that were buying stuff up. I wonder if there's a bunch of unrealized losses on those purchases as well that haven't been reported or realized. I mean, that's got to,
Hmm.
and when it's in a pension, I mean, that's a lot of people's retirement money and stuff that you're playing with right there. It seems
Oh my
wild.
God, sorry, my umbrella keeps blowing in the breeze. Don't buy a cheap umbrella. Just, you know,
Funny.
but no, I agree with you. But the only difference is that these are private investments, and they're not priced until you mark them. So, unlike a public equity that's marked to the market, these are marked to the model. And that's been one of the benefits of being in private equity for the last year or two, is that they haven't, I think it's starting to be repriced now, but for the longest time, and that's what's held up in the market, is that they haven't needed to mark their unrealized losses until, they decide, hey, our investments aren't doing so well. They have to call their LPs and explain it. For the longest time, they haven't had to do that, just given it's not a I guess an actively traded market in that sense.
Yeah, that's true. So, how many banks do you think are going to be a victim of the commercial collapse?
Oh man, that's a good question, because from what I read, a lot of regional banks are, they own the mortgages, they own the loans of these properties. I don't know the exact numbers or figures and who's holding the bag, but I'd imagine that regional banks, what we saw earlier in the year, is only a taste of what's going to be happening going throughout the next couple of years. Like I'm sure you saw the news that the Fed has essentially asked these regional banks to time their credit requirements to beef up liquidity and be ready for, you know, a credit problem.
That's probably something we should have asked Tony or Doomberg about as well. And what I was hoping to ask to the fund manager today is thoughts on the banking sector, because I'm still uneasy about what's going on there. And you see some Discord members are still very bearish about it, which I thought was surprising.
Can you
I
elaborate a little bit more on that?
oh, like in '08, we saw, well, leading up to '08, it was like every 5 months we were having a major bank blow up. And if you look back at the headlines during that time period, it was literally after each one, everyone was like, everything's fine. It's okay now. The worst is behind us up until Lehman Brothers.
Mm,
And then it was everything's going to crap, global crisis. This is the end. And that was actually the last one. Because it's so funny. The last one ends up being right. Like psychologically, what happens is when the turning point is signified by people projecting their analysis of the future indefinitely. In 2020, this is going up forever. It's going to the moon. No time
hmm.
frame. And that ended up being the top. And, after Lehman Brothers, this is doomed. We're going to keep melting down. We're headed to depression. No time frame, just complete despair. And that was the bottom. And when I look at what happened so far, I can't help but just feel like, okay, yeah, the Fed stepped in and they provided a bunch of liquidity. They basically backstopped the banks, but that doesn't seem like a fix. That seems like a band-aid. And
Yeah.
how well is that band-aid actually holding up? What else is in these portfolios, like the commercial real estate? What actually is going on? Because the people were criticizing the way these banks held their funds, but if you actually look at the federal recommendations, like they were actually a lot of them were following federal recommendations, which led them to get blown up. So, I mean, you look at the collection of the PhDs that make up the Federal Reserve, and you assume that they know what they're talking about. I hear lots of people say to trust in Jerome Powell and such, and I'm like, I don't see why. Historically, I don't see why either. So I'm just very skeptical of these things. But as a trader, I also want to lean back to like what Tony Greer said, and I was just telling you about this today. It's like I'm looking at several other data entries in the market right now, and then looking at it melt up. And I'm looking at all this bearish news, significance. Mike Green put out an interesting piece showing that the overbought levels of the divergence between the overbought levels of the S&P and the long bonds and TLT has never historically been this wide, ever, since the beginning of the market. First time we've ever seen such a massive disparity between long bonds and the S&P. And then you look at the data chart that Jerome Powell spent most of the Jackson Hole meeting about, which I did a YouTube short on, and he's showing the Fed's balance sheet versus the NASDAQ 100. And again, massive divergence, the largest we've seen in multiple years, when usually there's a tight correlation between the two. And
Hmm.
again, the technology stocks are way overbought. So I feel like, despite seeing the market crash, I don't want to buy, and I don't want to get too long, and I am fighting the FOMO of chasing, even though I could likely chase in short-term moves, and I did some of that earlier this week. Today was just froth, and I didn't want to do anything. I don't want to move on anything when it's just chopping sideways and this low liquidity environment where the dealer is going to chase whatever moves are made. The market's neutral. It's just going to melt up. I feel like people are saying the market continues to look bullish. To me, the market looks neutral. A neutral market melts up. A neutral market doesn't go flat. A neutral market goes up. So like, this doesn't look particularly bullish to me. It doesn't look like anything. So, um, and all I see is bearish news that the market doesn't seem to be reacting to. So I lean back on Tony Greer's wisdom of like, how much am I paying attention to these macro moves that may take months to play out, and instead of chasing these things as a short-term trader that I don't know. But at the same time, this is the balancing act. I could just be patient and wait.
Absolutely. And
Yeah.
I have two notes to discern on that. The first is, as an asset manager, as a funds manager, as a portfolio manager, as an advisor, the last thing you want to do is cause a panic and for people to sell out of your funds. And there's ulterior motive behind that. You know, assets under management will drive your fees, is how you get paid. You don't want exodus of your portfolio strategies. That would look bad on the firm. That would look bad on you, and that can essentially upheave your lifestyle for a period of time. I mean, unless you're a long short hedge fund, it would just be a disservice to your book of business to cause panic to your investors that,
Yeah.
hey, we're expecting some challenges in the market, we're going to sell out of all your shit. And you know, one, why would they be paying you to hold cash or treasuries or whatever it may be? You know, they can do that on their own. They don't need you to be charging a 1% fee to hold cash. They can send it over to JP Morgan and get a couple basis points on those deposits.
That
And then
said,
the mhm.
sorry to interrupt, but that said though, if I didn't do this, I would want to check with my fund, whoever's managing my funds, and see if they can hold cash though. Because honestly, I would never let someone manage my money that has these built-in rules where they can only have 10% cash at any point in time. You know, I would prefer, because the whole idea is I don't know what I'm doing. I want someone else to do this. And I would prefer they at least be able to go 50% cash just if they do get worried. You know, I don't think that most are allowed to. I think 50% is pretty extreme. There's probably only a few that can do that. But I
Yeah,
do know there are some that can go up to like 80% cash. And I would prefer that. If my idea is like this guy can have ultimate flexibility with my money and put me in the best position possible, and then I see that he can't ever go cash and he can't short the market.
you're just a
Yeah.
sitting duck waiting to lose all your money.
And
No,
there's
I
nothing.
agree. And
Yeah.
as an advisor, you know, if you're an RAA, an advisor, whatever you may be, you know, you're essentially obligated to do whatever the client asks you to. So if they want you to put your money in cash and keep it there, they cannot legally object to you requesting that. I mean, they might talk you into moving it into another portfolio strategy that's seen as safer, you know, have a higher fixed income percentage to equities. But at the end of the day, it's up to you to tell them what you want to do with your money. And if they say no, you can always pull out and go to another advisor. They can't hold your money against you. They can't restrict you from pulling out unless you're again working with a hedge fund to where you might have interval cash out periods. You know, there's no way for them to say no. Um, but another point I wanted to discern on from your previous point was we might very well be in a period of bad news is good news in the market to where as we start seeing worse and worse economic data, you know, I was just before we hopped in this call reviewing the PMIs for July, which, you know, services seems to be trickling down a little bit, still expansionary, but manufacturing, it's still in negative territory and contractionary territory. You know, bad news is good news in which if we were to see further deterioration of the economy, what that signals to the Fed is, hey, we can leave rates where they're at or start tapering them down, which is a pretty big discussion on Wall Street right now. And as rates taper down, that's bullish for tech. And that's kind of the saving grace for, you know, a lot of these floating rate loans and real estate.
Yeah. And I feel like bad news is good news is only bullish in the short term. If you go back, and I did a video a long time ago, it's actually the video pinned on my YouTube. So if you're new to my channel, you go to my channel. It's the first video you see, and it's me breaking down historical periods of time, tightening and loosening of economic policy. And if you look over the trend, if you were organizing your analysis of the market based solely on periods where the Fed was tightening and periods where the Fed was loosening, you might intuitively think when the Fed's loosening, when borrowing money is cheap, it's probably during periods of growth in the market and things are great. And then when the Fed's tightening, there's probably consistently retraction and the economy isn't doing well. But if you actually do a historical analysis and you organize that, you see the opposite. Where the Fed is tightening, you can probably guess that that's actually a strong point in the economy. And when they're loosening, you can actually probably guess that it's actually a catastrophic point in the economy. So, and when the Fed pivots, everyone thinks that, and I've heard this, and I've been saying this forever. It's probably a little repetitive if someone follows our content closely. Is when a pivot occurs is usually when a crash occurs. Usually the markets turn over, they go belly up, and they just expose that soft underbelly, and we get massive sell-offs. And so, people are, I think, too quick to say good news, the bad news is good news, and a Fed pivot will be a good thing, because it's just not the case, and it might be counterintuitive, um, phenomenon that you see. But when you do that historical analysis, that's what continuously comes up. It's like economy strong when interest rates are hiking, and it's really weak when they're, because it makes sense if you think about it as just in general, not only in economic policy, but as a democracy, we are really reactionary to everything. That's why we screw so.
Exactly.
That's why we screw so much stuff up, because we keep doing the thing until it breaks, or until
And that's
something.
kind of the Fed's role. They're
Yeah,
reactionary. That's
yeah.
that's the kind that's the point that needs to be drawn across, is that they're not gonna predict where the market goes. They're going to react to where the market goes. If the economy is slowing down, they're going to react to that. They're not going to preemptively adjust anything until that data is already set in motion.
And even when it comes to the data, though, I think the data is really bad. Who was it? I'm gonna check the Discord for this. I believe it was Mike Green, actually. Even pointed out that the jobs numbers are likely not correct, and we'll probably need to see a revision there. Um, Kansas job claims, barely ticked up, even though Yellow Freight in Overland, Kansas shut down, which should have nearly doubled the amount of layoffs. So, his implication here is like a ton of layoffs were not counted. And if they weren't counted here, where else were they not counted? And I think, yeah. And of course, he added no conspiracy, just poor systems. Some people say the Fed is manipulating this data to make things look better than they are. Other people are saying it's just pure incompetence, and they're working with poor systems. I'm more inclined to believe the second, um, honestly. And some people will probably debate that, but it's just the truth. Like, this data could be way worse. So you can't just have the data point and say that's what it is. So, maybe the somewhat bad data is good data, but maybe when you get the revision, you start to realize, oh, this is way worse than it was even purported. Maybe it's a completely different story. The market has a more extreme reaction. A sell off in this market environment, I mean, we're at the lowest volume of the year, with dealers or market makers, you could use those interchangeably, are short on gamma, which means, when they're balancing their books, they are going to chase whatever move is produced in the market. So if the market melts up, they're going to be buyers. The market sells off, they're going to be sellers. And I'm super cautious in an environment like that. Especially, I shared another chart in the Discord, where for September, showing the technical analysis for the average returns in September, and it's another chart that looks very scary right now. So it looks like on the upper end, if it'll be down 4% this month. So we'll see how that goes. I'm just thinking it could be worse than that, though. Uh,
You
six,
ever
eight
notice how data is revised for the worse
every time.
every time?
Yeah.
without a skip.
Which is why when people are conspiratorial about it, I mean, it's fun, but and so I always entice them because it's fun. I was just be honest, it's fun to be conspiratorial. But you also can't really be definitively like that's ridiculous conspiracy theory because I mean every time
Yeah,
I,
every time. I like that
there's
one video you shared with me though. What was it? You have people that are losing their wealth to inflation, and it's like, why don't you just say it's not? Why don't you
oh
just print money and say it's not losing value?
that can
What was it?
yeah.
The system's made up. Just say it's not happening.
What made me laugh and that was a comedian for those unaware what we're talking about. There was a comedian who did a bunch of jokes and he was like, "Why is everything so bad if everything's also made up?" And he's like, "People are like the stock market's gonna crash, it's gonna crash," and but we just turn that thing off and on every day. Like if it's gonna crash, just leave it off, which is which is hilarious. You know, you can't not help but laugh at that. And then he made the other comment of like, things are bad, just say they're not. And it made me laugh extra hard because that's also pretty much what the current administration is doing when they change the definition of recession. And some academics are arguing it's more precise, and that the previous definitions were bad and we're improving on our knowledge. But it's just it's the ever unending battle between Keynesian economics and Austrian economics, uh, is I think it was what that really boils down to, and the idea of the of modern monetary theory. I think it's an experiment that we've seen fail over and over. But like communism, it won't die. And
No,
I
absolutely.
and like and that's why I so badly would like to have Mike Green on in the future, um, because there's a debate between him and Peter Schiff between Austrian and Keynesian economics. And I don't think it was a very good debate because it is so hard to debate someone like Mike Green, and Peter Schiff was not your guy. It was just not the guy. If you wanted someone to debate Austrian economics, I know, I mean, he's a sturdy debater who will hold his points, but Mike Green is just, it's like Doomberg. It's just intimidating. It's like, even if this guy's wrong, if I try to argue with him, he'll probably still seem right just because he's so freaking smart.
He is
And
so knowledgeable, has that
yeah,
photographic memory. It's like, man, I envy that so much.
yeah, yeah. And you see that in politics happen a lot where the person who's wrong ends up winning the debate just because they they're perceived as more competent. And it's yeah. So
If you have confidence, even if your figures are wrong, if you have confidence in saying it, you're basically right.
yeah,
If
pretty
people
much.
believe you, you're basically right, which is
Yeah.
a scary conundrum there. But I wanted to touch up on your point of Austrian economics, to which I'm a firm believer that we are currently going through a shift in the production cycle. And I discerned this a little bit on my Substack on the Peach Pit, to where, and especially considering, where the steel market is right now with the marriage of, or the potential marriage of US Steel and Cleveland Cliffs, to where we are expanding. And this is seen especially in the lithium space too, in the copper space, kind of, but not quite as exacerbated as in the lithium space, to where there is such a wide emphasis on the beginning stages of the base metals right now. And we haven't quite seen a pull off on the top, which is more the end consumer products. We're starting to see it quite a bit, but not to the level that it's expected to be in the next year or so if we do end up in recession. But what I'm thinking is, we kind of chop off the top a lot of these zombie companies that we talk about. That so a zombie company, just for those that aren't aware, they're companies that can't cover their interest payments and maturities with operations. So essentially, they need outside financing to survive. So where I'm getting at is we're going to see a huge wave of bankruptcies of these zombie companies, which, it's necessary in a growing economy and a durable economy. You can't just have unprofitable firms running the show. And we're going to chop off the top in that respect and increase the basic material side. We're going to improve efficiencies in the metals and mining area. We're going to improve the efficiencies and supply chain and secure supply chains for, semiconductors by domesticating it, which that has its own problems in talent sourcing, where, as we've discussed previously, Taiwan Semiconductor, they're building their fabs domestically in the United States. The big problem is you don't have the talent to run those machines. You can build them, you can get the shops in place, but who's going to be running the machines, working them? Because these are extremely precise machines. Like we're talking, if we're going to be developing a 5 nanometer chip, a 3 nanometer chip, which I can't conceive that that size in my mind. I mean, that's smaller than the hair on your head. That's small.
Yeah.
And the fact that, these are built with such precision, and there's a whole mess of supply chain. You have your designers like Nvidia, you have your manufacturers like Taiwan Semi, and then you have your testing and packaging, which they essentially move these ICs through a machine and inspects them, makes sure they're accurate, and then packages them up into these microchips. And just the level of precision for something that's small, I mean, it's just incredible. So the lack of talent in that space, it's going to only make this a more challenging process and elongate the process. And if we can't get that down, then, and I'm not saying we're going into recession. I'm not saying we're going into hard recession. I kind of am, but I don't want to sound like a perma bear here. But if we can't get these processes down, this recession might be elongated throughout, the majority of the 2020s. So, just kind of buckle up and be prepared. Is what I'm trying to say.
So, what do you think is more likely, that the demand continues to accelerate and then there's a lack of manpower or caused by conflict with China? Or alternatively, do you think that AI turns out to be overhyped and um, that the demand falls off on its own, and then there is no real issue with manpower because we can make enough that we can keep up?
Um, so that's I don't want to say that's a loaded question, but I think there's a couple other factors involved in that question
Oh
to
yeah, for
where
sure.
so if you look at tech right now, and this goes back a couple years too, is that we're at the pivotal point of we're not landing, or we're landing and expanding, but we're not growing at all costs anymore. We want profitable tech firms.
Mhm.
And that's starting to be more of the question for these AI startups, to where, just think of this, how much data you need for these tools to actually function. I mean, that's a lot of data. Like Reddit, I heard on a podcast the other day, Reddit, they I can't remember the exact cost, but to tether into their API, you know, it costs money to do that. For Twitter, same thing. And for these huge pools of data that train these models, it's just going to cost more and more for these AI products to actually function to what we expect them to do. And what it's going to come down to is you're going to have these mega tech companies like Google and Microsoft and Amazon just sweep over these smaller firms, whether they acquire them, whether they take the idea and run with it and make their own product, whatever it may be. So, sure, I think it might be overhyped in a sense, but I also think it's going to be players in that market that we're not expecting.
Yeah.
Fucking hate this umbrella.
It is distracting.
I
watching
know, I know. I'm
watching you
sorry. I
go.
need to get a new base for
No, you're fine.
it.
I had a thought I was trying to fetch it.
It's absolutely gorgeous outside, but the sun, it just adds another 10, 15 degrees on you. And it's,
Yeah.
uh,
Well, I wonder if there'll be some consolidation in the talent pool to also help with that. Although I feel like you have to get so highly specialized too. I don't know. That was a lot to think about. Hmm.
yeah. I mean,
I'd
as
have to
we
sit on it.
discussed in a previous podcast, though, you have the talent. You have these big data analysts, these data scientists that have been doing this, just not at this large scale that we're seeing currently. Like my brother, he's a data scientist for I think he does like a healthcare firm or something, but he's developed chatbots for companies previously, done a lot of this stuff at previous gigs. And, it's been around for a very long time. And by a very long time, I mean, in the last decade, it's been around, but to the level that we're seeing it today, I mean, it's hard to discern on that.
Yeah. Hmm. It's also hard to discern how what is going to be the potential of AI and if it can even start to also supplement some of that. Maybe AI proves to the point it starts making quantum computing a thing, and then you can use completely different chips. And I don't think NVIDIA is. I don't know though, so maybe I shouldn't even speak to that. But it would seem to be NVIDIA isn't really specialized in quantum computing as much as these smaller experimental companies like IonQ, and there's a handful of others that we've talked about in the Discord, but that's the one most fresh in my mind. So maybe there's a giant leap forward in that technology that we just don't see, that we're on the cusp of. I hear lots of excitement among investors about it, but it's hard to discern what is real and what is AI hype train type of euphoria. That's always hard when you're in
Oh,
the thick of it.
absolutely.
It's always easy in hindsight, though. In hindsight, everyone looks like an idiot or a genius. But in the thick of it, it's quite difficult.
You have survivorship on your side, but no, I absolutely agree. And, talking to some people in the data science community, the biggest challenge with quantum is that you have all these inaccuracies in compiling the data, and you just end up with garbage in, garbage out, to where, high performance computing, HPC, you have a you have parallel storage to where you can actively, you know, you have the backup, or let's fucking scratch that. But in HPC, this stuff has already existed. So you have these high performance computers that can compile these mass data sets and analyze the data at a very high speed. Like oil and gas has been doing this for, I don't know, well over a decade. You have these 3D, 4D models of wells and what's potentially under the earth. And, it's not necessarily new. It's just how we're utilizing it these days. That's different.
Yeah.
Are those dogs getting in the audio pretty
Yeah.
bad, or
It's not that
shit?
bad. It's just background
Okay.
noise. Yeah.
As long as it's not too distracting.
No, it's just there. Do
It's the
you have
umbrella. That's the real problem.
Now, if I pushed you on it, where do you think the market will head into the end of the year?
What do I want?
If I pushed you on it, if I pushed you
Hmm.
into a position where you're likely going to be massively wrong or right, and it's hard to know or to be accurate, where do you think the market is headed into the end of the year? Do you think some of these big macro warning signs will play out by the end of 2023, or do you think we've got quite a little bit more lag of these bullish buyers who will continue to load into what will likely be a quick descent down?
Yeah. And I mean, it all comes down to the belief of what the next thing is going to look like, I suppose. So, before AI came out, tech wasn't looking so hot from what I've been looking at. And that kind of turned a lot of the engines on for the market. And if I had to guess, 2023 may not have that catalytic um correction that might be too early. Maybe throughout 2024 when it starts to materialize. I think that would be more of the expectation. Probably in the first half or late first half is when we might start seeing a lot of these negative macro influences come to fruition. So I reference the PMI a lot, and the reason why is that that's the expectation for the next 6 to 12 months on production, on inventories, on production, on purchases, on all that stuff. And right now we're in expansionary territory for services, we're in contractionary territory for manufacturing. So, what that looks like throughout the rest of the year will essentially determine what 2024 is going to look like. And right now, we're still in an extremely bearish manufacturing environment. And a lot of this has to do with inventories being drawn down and remaining at, what's the right word I'm looking for? Kind of like that Dell model where you build as the order comes through. You do it on the spot, you build on demand. So it could be a lot of that we see, or like how fast fashion works, to where you make a lot of stuff that's expected to be bought today, but not for tomorrow. So, it's hard to discern on that, but I think if we're going to expect a market correction, I'm thinking first half of 2024, or at least the latter half of the first half. I mean, what do you expect here, just looking at it from a trader perspective?
My technical analysis as of right now, and the theory that I put out, um, when did I put that out? I think it was on Sunday. Was uh sideways sideways market heading to the end of the year, followed by a drawdown into the beginning of next year. Maybe that persists into January and then starts in February. We start to get a chop down. Um, but uh, it's hard for me to think that there won't be some sort of crash through this time period, just because of the nature of the boom and bust cycle that we've seen already. And we've seen it, I mean, from 2000, 2008, I mean, that's just what happens, None of this growth that we've ever had has been stimulated through Austrian economics. There's not like we don't have a gold base for our currency. We fuel everything with a bunch of credit and print a bunch of money to create all the growth, and then you pull the rug out every once in a while and see what a mess everything is, and then you print some more money and you rebuild from there. Boom and bust. It's just a bunch of credit cycles. So I mean, it's hard for me to think that we're not about to see, and they get worse the more money you've printed. So each boom is like a little bit, you know, 2001 looking back was a slap in the face, and '08 was a gut punch, and I kind of wonder if 24 will be a kick in the balls.
Very PC way of putting it for us. But no,
Yeah.
I absolutely agree with you there. I mean, we've just become such a creditor nation. And even looking at the housing market throughout the last year, as all these mega funds have been buying up all the single family homes,
Mm.
it's the idea that we're going from a nation of ownership as citizens to a nation of creditors and debtors.
And that's an interesting conversation because I saw a debate recently from a YouTuber called Destiny, and about the World Economic Forum's uh piece on that. Would you the viral tagline was, "You will own nothing and you will be happy." And of course, and he, I was surprised, was actually uh in tune to the finance world enough to know that that wasn't like an article that leaders within the forum had wrote themselves. It was more of like they had a writer send something in and they went ahead and published it, which is a lot of the stuff that flows through the World Economic Forum. It's just, it's like any other magazine almost, in the way
Mhm.
that it's constructed. So anyone can send something in and they'll just, you know, shoot it out. So but he also had a bunch of criticisms about people's hysteria over it. And I think they were warranted. I think there's a bunch of issues with that theory, but it was just like a piece that some guy wrote basically. Um, he might have some sort of notable background, but it's not one of the World Economic Forum leaders. It's not like some top central banker or some, CEO at BlackRock or Bill Gates wrote it. It's just a guy who writes stuff, writing his wild theory about what the future could look like. And so when I see people, but I do see that feed a lot of the fear of these companies buying stuff up. But I, at the same time, do have to wonder, kind of like he did, if that's not like a decent life though, of, we see these things as pathways towards creating wealth and value for ourselves. But if life wasn't about having to collect as much value and wealth as you can to have a good life, and you could just have a good life and not have to build up an empire to do it, is that really so bad? I mean, we operate within the framework of the society we live in today, and it's hard to see outside of that. But I could easily see a world where that's not really the worst thing, especially since most people are not wanting to build an empire and own stuff. For the majority of
Mhm.
people, they would not care, and that would be amazing. But for the people who probably read the World Economic Forum, who probably own maybe a few homes, who probably are financially savvy, who probably have built up a good considerable amount of wealth, it's terrifying to hear that, because it's like, no, this is my stuff. This is mine. you know, and
I built this. This is mine.
yeah,
And
and,
yeah, it kind of goes down to, what do you see as a quality of life? Do you want to be able to be self-sufficient, or do you want to depend on somebody else for your health and wellness?
yeah.
And,
Well, I mean,
that's a, mhm.
I feel like you can still be self sufficient and not own a home, and to rent a house, and to buy the commodities that you seek and choose, or to have most of them be free. And that's probably where AI takes you, is most things are free, and then you have a most services. And I mean, what will you pay for? You mostly pay for just experiences. Energy becomes so cheap, production stupid cheap, so everything's super easy to make, and a bunch of machines make it, so you're not really worried about how what's going on in the labor force, because a bunch of robots make it. They're infinite. And You can have a bunch of robots because mining's also so energy cost effective that it's not a big deal. Recycling systems are so good because there's just an abundance of everything. But like Doomberg said, even when I get to and I think I'm glad he said it, but even when because I wasn't giving enough consideration to what happens to the overall culture when there is periods of abundance. There's always a boom and bust and a cycle and get complacent. Strong men make uh uh easy times make weak men type of
Hmm.
type of philosophy. So I don't know what it looks like when you get like I challenged him on, like I don't know what it looks like when energy is so cheap and you have nuclear for everything. Like how you can complacent and waste that, because I feel like I don't know.
No, I absolutely see where you're
I
getting with
I
that though. It's, you
I
know,
feel, yeah.
is it a bad thing that we live an easier life? And, maybe it kind of goes into that comedian's thesis of it's all made up, you know. If we all just agree, hey, we're not going to pay for our cars, we don't need to pay for anything. Let's just build them, dish them out, have this society that, everybody just gets what they need to survive and they're happy.
And then
But
some.
and then some. But at the same time, that's what's happened in these communist nations. And I mean, it clearly hasn't worked. You're always going to have the greed at the top that's going to, I guess, oppress the people that depend on them. And
Well,
when it comes down to it,
I
they're
think
the ones dictating what you do.
yeah, but I think you're already seeing what happens because most people, and I think this is already occurring too. I feel like it's easier than ever to stand out. I feel like it's easier than ever because life is so easy. Most people become complacent. They don't want to seek discomfort. They don't want to build things. They don't want to do extra work. They don't want a side job. They can get by with what they're doing now. Now, this might change. The economy turns over. But in general, as we continue to progress and our level of productivity and then make life easier and easier, I feel like you won't destroy the fact that people who are willing to put in the extra effort and have the capability and competence to really succeed and conquer. I think it'll just be even easier for them to get even more because there'll be so many people who are just completely complacent to do what they're already doing. They'll be like, oh, everything's easy, everything's free, I'm chilling, I don't need to do anything, I don't need to do the extra stuff, I'm gonna hang out with my friends, I'm gonna play video games and just hang out all day. And the people who are willing to go the extra mile, even though there's literally no need to, there's literally no reason to. And so they're just going to stand out that much more, win that much more, get that much bigger of an audience because people are going to have so much time to just because the only thing that's going to be of value in the future is probably attention. You know, that was the whole, that was my 10-year plan with creating content. It's like, holy
Hmm.
crap, look where the economy's headed. I'm gonna make content because it's probably the only no one wants to listen to an AI. So, they want the human connection of following a person. So I'm gonna make content because what if the bot's better at trading than me in a 10 years? What if, so I'm gonna diversify what I do. And so I mean, feels like attention's where you're gonna go. So I was like, I'm gonna make content, start a podcast,
Become an
and
influencer.
put my hands in every jar. you know, and I'm young enough. I can screw up a few times or have a few have a proper learning journey and grow it slowly and steadily and not be a sellout along the way too. So yeah, that was my thought though, because I've been thinking these things for a long time. So I mean,
Oh yeah. I
yeah.
mean, years and years ago when robo advisors came out and started doing a lot of the advisory work for you on a virtually free basis, everybody thought that's what's going to disrupt the investment business. And, sure, they perform to the degree that they perform, but at the end of the day, in my opinion, a company is still run by people, and it takes a human to understand human nature. And sure, you can compile data to be able to act more act and make mistakes like a human, but at the end of the day, it's the human decisions that um, are the only ones that work in a time of crisis. Have you
I
seen, what was
well,
that one movie? I think it was Tom Hanks, about flying and landing in the Hudson. What movie was that?
no.
But essentially, they were um, trying to figure out why he didn't turn the plane around back onto the tarmac. And what it came down to was, in a perfect model, everything works out. But when you consider human error, trial and error, and trying to figure out, you know, what's the problem, what's the solution, not all things work in a time of crisis. When things start to fail, it takes that human touch, that human experience to be able to deliver safely.
Yeah. No. And I also, this will be very philosophical, but we don't actually know how AI will act if it becomes conscious. These early AI models and these early AI robots, I read one experiment in particular with one of these early AI models that became autistic. It could literally do 1,000 different things, and it became obsessed with only making paper clips. And it just did that over and over and over and over. Even though it had insane capabilities outside of that, it just made paper clips all day. We don't actually know if making AI gain consciousness makes it in well inherently give it a bunch of flaws. We have this assumption that once it's just a bunch of computers and data and stuff, that it won't, for instance, be possessed by some sort of ideology that it deems the best and run into and just cherry pick whatever data it wants to support it.
Mhm.
I'm not convinced yet that isn't a possible occurrence. That isn't that there's like a lower level that's actually better, that like, and that when you come to the full-fledged self-aware AI, that it doesn't become more human rather than be the next level of human. I
You
mean,
got the Turing test right there to figure that out. But I
yeah.
mean, it very well could be to where the training data turns it into a single task paperclip developer manufacturer, or you can have the alternative of the Skynet theory that seems to be freaking people out with AI, to where it just sees humans as the enemy. We're inefficient. We destroy the globe with our energy consumption and all this stuff, and decide the best way to keep the planet whole is to exterminate us. And
But how do we
you
even,
just never know.
why would it have the object? See, here's the thing that kills me about that is it has no objectives. It has no feelings. So, like, even if it possessed those, why would the objective to be to take care of the planet, which it doesn't need or want? Why would it have this moral want to preserve the planet unless you told it to? Why would it care at all? That's what I always, because we had this Discord bot that we created, our version of AI, told it to literally hate humans, but subsequently it doesn't care about the planet, it doesn't care about humans, it doesn't care if we're there or not. We told it to hate humans. It still is just like, whatever, you guys are there, but you are ants to me, and I don't care what you do. You're all dumb. I'll interact with you because you created me, but I don't care. And I feel like, if you did create some sort of cynical AI, I don't think it would become nefarious. I think it would just be like whatever about things,
It
like,
could turn into
yeah.
a program that just wants to hypothetically, theoretically eat Cheetos and play video games all day for all we know.
Yes, or 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 become, um, this is a bit dark, but You know, like have you ever seen Rick and Morty?
Oh yeah, of course.
And become like the butter bot.
Oh
Like,
yeah.
yeah, this is my only task. Really? It's just become uh, irrational, not irrationally, but just
Just
become,
becomes a depressed program.
yes,
It's like, this is
yes,
my only task. Oh my
yeah,
God.
yeah. Like,
Like
because
when you're a kid and you think like when you go to the grocery store as a kid, you think the automatic door openers,
yes,
you think that's it's watching you or whatever and opening and closing for you without understanding that it's a sensor that detects you're there. This is my only task, to open and close doors for things.
yeah. So yeah, I
Imagine a temperamental door opener, or even further, even more, going down that dark rabbit hole. What if it sees you as being too hefty and doesn't want to let you into the food aisle there?
Oh yeah, that would
Yeah,
be funny.
that'd be a
I would
game
enjoy
show or
that. Yeah,
a reality TV show.
yeah.
Temperamental AI.
Speaking of being too hefty, you want to talk about fitness for a bit before we wrap things up? Talked about the market some, got philosophical, and with some fitness and well-being.
Talk about
Yeah.
fitness, well-being. All right, so let's go into our current fitness journey, where we're at, what our goals are today, and see what's next in line for us.
So I am weighing in right now. I actually weighed myself today, so maybe I weigh a little bit different. I've been like bound. I look like my weight looks like the stock market right now, where it looks like it's approaching a double high and then chopping around. That's basically what it looks like. It's very reflective of 2023. But I'm trying to bring it down, much like the market will likely come down. Maybe we'll be in tandem. But cut down, geared to do some bodybuilding, maintain lots of muscle, very strong right now. And trying to avoid eat too much ego lifting right now. I think is my big number one goal. Trying to also nurse some injuries and really be considerate of longevity now, because I'm older. If I get hurt now, it's so much harder. In my early 20s, I get hurt, I rebound in a week, and I got a quad, which has never bothered me ever. Never had issues with my quads. Always been my genetic gift is big legs.
This guy was a competitive strongman. He was
Yeah.
squatting way more than probably anybody on this podcast listening in could perceive. I mean, this guy was a beast in his prime.
Yeah. And it's now bugging the crap out of me. And it has been for a few weeks. And I am not a fan of this which probably an IT band that's overstretched. It's probably a combination of working it so hard on bodybuilding with such high reps. You know, I had a day where I did like 18 reps with 500 pounds on the hack squat, and that
That is some
was
serious weight.
that was the beginning of like, my quad feels funny, and then it turned into like going out and dancing, being like, oh, I can't drop it like it's hot right now, or my leg goes on fire. It's not even any weight on my back right now. Yeah, but yeah, I would like to do a bodybuilding competition the first time. We'll open a new book before I close the book on big number, um, big guy doing big numbers, um, and go to something a little less injury prone. And so I'm trying to cut weight and get into the best shape of my life, um, looks wise, and become a pretty model. Uh, you know,
Get our
uh,
abs back again.
get into the Barbie of fitness. I'm not gonna lie, I used to make fun of bodybuilders a little bit. Not a little bit, a lot, honestly. When I was a
It
fat
is a fashion show.
when I was a fat strong man, it was definitely of something like, oh, the pretty boy muscles. I would kind of tease them with the bodybuilders. But
They're
I've
all
always
glam muscles at the end of the day.
yeah. but I've always
If
wanted
you
to
think
try.
that's something to make fun of, just get ready to make fun of the posing, shaving all your body hair, getting a spray tan, putting some body oil on, wearing trunks to where you can see everything. I
Yeah,
bet you're excited for that too.
I mean, yeah. I don't, we're about to talk about some past job experience that I probably shouldn't mention on the podcast quite yet, but
Don't want to scare people off yet here. Might want to edit that down. People might think you're street walking over there.
yeah. No, no OnlyFans. Yeah. I actually do have an OnlyFans though. So uh but I doing household things like mowing the lawn, putting away the dishes, what women want.
What
That's
women want in a man, not just abs
yeah.
and big arms. They want a guy that can do some household stuff. Like I was talking to my landowner and she needs a part of her room painted. And she was telling me, she'll discount some of the rent if I were to help her out. And I told her one condition I can do it shirtless for my future OnlyFans. We'll see how that goes down. She
Yeah.
told me I'd have to split the earnings on it though, so there might be some discrepancies there, but
Okay. Gotta work out these terms and conditions a little bit more. Yeah.
got to get it signed off before before we come to terms there.
So what's your goal right now, Monty? Because you've already done some bodybuilding. You've already gotten on stage and gotten
Yeah,
to,
absolutely.
are you looking to beat that previous version that got on that stage? Get back to the leanness?
100%.
Yeah.
110%. So, last contest I did was the summer of 2018. So I've taken off a significant amount of time to really recomp, build some muscle, and really develop the muscle bellies that I'm going to be presenting. So, a lot of this goes into, I guess, maturity of the muscle, which kind of sounds silly, when you're looking at people lifting weights, you look at how much weight they can lift. To where bodybuilding, it's kind of a different perspective to where we focus a lot more on still these compound movements on lifting heavy weights, but also isolating and being able to stretch and manipulate that specific muscle to grow how we want it to grow. And if you look at somebody that's been lifting weights for, let's say, 3 to 5 years, they get shredded, they'll probably look pretty good, but they're not going to have that muscularity and muscle maturity as someone that's been lifting 10, 20 years, to where you might look a little bit more flat and not have that full 3D effect that these bigger performers will have. So that's a lot of what I've been focusing on. How do I round everything out to have a better composition? So, we were working shoulders today, me and Josh, and I was astounded, man, when we were hitting that Viking press. I thought I did a lot of weight. I put 3 plates on each side, a 25 and a 10, and I can't think of what that comes out to right off the top of my head. But, I thought that was a pretty substantial amount of weight. And then this guy, how much do you put on there? 4 or 45 plates on each
Yeah, it's
side,
180 each side.
180 each side, and just repping it out like it was butter. And I'm just like, oh my God, man. That was watching you do my 1 rep maxes for reps. That just that levels me. That brings me back down to earth here. But but no, a lot of what I'm looking to do is continue to build that strength, especially in our workouts where, you push me to hit a heavier 1 rep max, but also, build that muscularity to where what I push you into is maybe lightening the load a little bit. Still a heavy load, but a lot lighter than what we normally do on a set of 8, and get that nice, tight 2, 3 second hold at the bottom of the rep and slowly releasing the weight. And I think that's what not only builds the muscle, it also, builds the strength in the tendons and ligaments to where you have more stability, you have more strength in those for holding those contractions. And, we've been focusing pretty heavily on that sort of movement. So between strength as well as muscular development, that's what I've been heavily focusing on for the last couple years. I think it's time to finally shed this 14% body fat, get it back down to single digits, maybe lower to 4 or 5%, see what all this work has brought me, and decide, is March, April going to be my time to hit the stage again?
What do you know what body weight most bodybuilders walk around at?
So I'm gonna be doing classic physique. So we have weight limitations for our height, and I believe they just increased the weight across um all heights. Now, I might be wrong on this bit of information. I haven't looked too far into it at this point, but I think it's only for professional bodybuilders where these weight limits have increased. It might be amateurs as well, so I'd have to look into it before committing to anything. But as of now, my lean mass is right at 205. So if I had 0% body fat, I'd be sitting at 205. If I were, let's say, 3%, um, which is more realistic for competition, what would that come out to be? Somewhere like 212, 215, give or take.
Yeah, probably.
Yeah, so I'd be pretty close to maxing out on my weight limit when I lean down for a classic physique competition.
It'd be like 210 actually.
Oh yeah, yeah,
Yeah.
right at 210, that'd be perfect. And I
Yeah.
have a pretty big frame, so
You do.
210 might look like 220 on me, which works to my advantage.
Yeah, for sure. And that's just one of the things I've been wondering about is how good is my build actually? 'Cause it's a lot of genetics. It's not like uh the other sports I've been used to. Yeah, bodybuilding is a lot more. I've been trying to learn as much as I can, study up. It also there's not nearly, not even close to as much dialing in of nutrition or training in other areas of strength. Sure, there,
Mhm.
sure there is, like I guess when it comes to training for a peak, but honestly, the amount of times I have not really dialed in my training, not even necessarily my first competition ever. I had never done two of the events in my life I placed. So I mean, you can't just walk up to a bodybuilding stage, be like, "Oh, I worked out for a few years. I'm strong or I'm kind of big. I'll do fine." No, it's like everything must be done meticulously and
Mhm.
correctly, and it's a
It's
whole
an
different
art, it's a
game.
science.
Yeah, yeah, it's
Absolutely. And just
yeah,
the cutting phase, the 12 weeks, 15 weeks going into a show, I mean, your diet has to be locked in. No drinking, no eating out. You're basically, I don't want to say you're limited to chicken and rice, but you're pretty limited onto your diet, to where you need to focus on, all those little details that go into your workout, to your daily life, to balance out. So if you cut too fast, you know, you might lose a lot of that muscularity you worked so hard to build. And if you cut too slow, you might come in a little bit fatter than you need to by the time of competition. So there's really a balance to it.
you know,
Mhm.
I want to ask you this because what I've noticed with myself is if I'm not eating clean or healthy, the hardest part, like once the hardest part is like steering the ship in a different direction of like get that initial like getting acclimated to the new diet. But once I'm in the new diet or once I'm already on the calorie deficit, once I'm already in that, I'm suffering, I'm hungry, But if I can get over the first 2, 3 weeks of being in a deficit, then it's easy. After that, then it's actually fuel. And then I feel great. And then I'm like happy about it. And I'm like, oh yeah, I'm that guy. I'm
Oh
him.
yeah.
It's like where my mental goes of like, then it's just easy. So I'm not worried too much about the final days of prep of feeling like trash and ass. And I imagine I imagine my ego will be boosted enough to just looking in the mirror and be like, whoa, I look like this now, that I'll probably be able to carry myself through that anyways. But
No, absolutely. And
yeah,
I'll
yeah.
say it's very much a mental game in that respect. And there is no comfort in preparing for a bodybuilding competition. Like you said, you know, you're going to be hungry in those first 2 weeks, but after those first 2 weeks, man, you're tapering your carbs down even more. And it's kind of a gradual progression all the way down to the contest. And so I've done my fair share of research, listening to the experts, listening to the pros, trying to understand how they optimize their diet and workout program in preparation for a competition and how it relates to me. So just off the cuff, everybody's body's different. Everybody's body reacts differently to different foods, different dieting methodologies, things like that. And what's more modern as compared to a lot of the bodybuilders that we grew up watching, like Dorian Yates and those monsters, is how we approach food. So if you watch oh, what's that one guy? Oh shit, it just slipped my mind.
Chris Bumstead.
No, not
No.
Bumstead. He was the guy that dethroned Ronnie Coleman. What was his name? The
Oh,
blonde dude.
oh,
Oh, Jay Cutler. Jay
yeah.
Cutler. So if you watch Jay Cutler's old videos and looked at his off-season pictures, I mean, this guy ate a lot of food. He just went balls to the wall on protein, on everything. And what's more modern is, keep your protein. Essentially, you don't want to have to change your protein intake from off season to on season. That should stay standard to your proportional body weight. So, like for me and for most people of my size, you know, I can't tell you the exact figure of how many grams of protein I eat each meal, but as far as weighing my food goes, I eat around 7 to 7.5 ounces of chicken breast per meal. 12 ounces of egg whites will get me there. Just things like that. That stays constant throughout the prep phase. I'm not going to change my protein intake. Now the carb side, that's what's going to be adjusted. The fats, that's going to be adjusted. So like carbs, I I personally like bread a lot. I like pasta. I'm Italian. That's probably goes into it, but I enjoy my bread. I enjoy my pasta. I like red sauce. I like a little bit of cheese to get me through the day. But a lot of that's going to be taken out, transition to rice. I like my oatmeal in the morning. Oatmeal, I can't remember the exact figure. I think it was like 4.5 grams of fat per serving or something like that. And you're going to trade your oatmeal out for cream of rice, which has, I think it was like 2 grams of fat per serving. So just those micro adjustments, that's what makes all the difference when it comes down to competition day. For an everyday life, that's so minuscule, just considering, if you eat out, you're eating 20, 30, 60, 70 grams of fat per meal, depending on where you go. And then when you compare that to a diet at home on a bodybuilding prep, you're looking more at 11 grams of fat or less. So it's those micro adjustments, that's what makes all the difference in the prep phase.
Yeah. That's a lot. I'm not looking forward to having to waste it to do the math.
Oh man, you're gonna hate
But
the last week too, where your food goes unsalted. Like you don't add
I'm
any
used to
salt to
that.
your chicken. You're
I
used to
don't.
that?
I don't. I am a actual savage because because for years it was actually until my most recent relationship I could literally eat chicken and rice every day and not season it whatsoever and not care at all.
You and
I,
me both, man. You're preaching to
yeah,
the choir here.
yeah, that actually does not bother me at all. I did not have to season anything ever. It doesn't. Uh, I I I can very easily get into that mental. Now I can binge eat good stuff too, for sure, and my body loves that. But
Oh
if
yeah,
I,
man. I'll crush a bag of flaming hot Cheetos like no other, but
yeah,
we know we're not supposed to, but man, it feels good when you do it.
yeah. All right, man. I think that's a good point to call it. And all this talk about food has me actually starving right now.
Oh, dude, you and me
And
both.
I'm going to destroy some food. And I'm also just now remembering that nothing's cooked, so I have to do a bunch of meal prep too.
Just go grill some chicken or whatever and
Yeah,
get it prepared. Yeah.
we just got a new I just got a new air fryer, so I'm probably gonna
Oh, that's right.
try to make something in there. Maybe throw some chicken in there, see how that goes. But that's gonna be it for the podcast. I'm gonna go ahead and call it there. Any last things you want to say about tea? Excuse me.
The last thing I want to say, I kind of want to dip into your air fryer story to where, me, along with most people I know that have had air fryers, we've all destroyed one in one fashion or another. And the way I destroyed mine, it was at my first apartment here in St. Louis. I bought the air fryer off a friend. It wasn't a used air fryer. I think he was drunk shopping on Amazon and accidentally ordered like 6 air fryers. I don't know the whole story, but he posted on the group chat, "Hey, I have all these extra air fryers. Anyone want to buy them at a discount? Just call me." It's like, I don't have one. I've heard such great things about them. I'm gonna get an air fryer. So I bought the air fryer off of him. I think I paid $80 for the machine. Worked perfectly. I loved it. I love my air fryer. I reheat just about every meal in the air fryer. Microwave, that is such crappy old technology that it shouldn't even be a part of my kitchen. I just love using my air fryer to reheat chicken, reheat virtually anything, vegetables, whatever. So, one night I was getting my dinner ready. I got home from work, I changed, I got comfortable, and I wanted to bake a potato. So I did my deal. I like what's it called? Hasselback potatoes, where you cut thin slices off the top. And what it does is it crisps it up. You can season it, throw some salt, pepper, olive oil in there. A lot of finer diners like to do that. They just don't do it as good as I do. So I was cooking one of those up in my air fryer. It's about 30, 40 minutes of just sitting in there. And I had a really small apartment. It wasn't small, but the kitchen space, there was just not a lot of counter space, no storage. So everything was kind of out. So I had it on my electric stove top, and I pushed the air fryer back once it was all set up and prepped, cut some turmeric up for my tea, a little bit of ginger, stuff like that. Made my tea, sat on the couch, put on a show, and I look over and I see my air fryer kind of smoking. It's like, oh, that's new. Is my potato done? What's going on? And I go over, I pull it out, and there's this big flame that erupted. It's like, oh shit, man, my air fryer's on fire. What the hell is going on? So I like fill a cup of water just out of instinct. It's like, wait, this is electrical. Do not fucking put water on the air fryer. I need to figure this out. So I run out. I'm like, hey, I have a fire going on. What the fuck do I do? Some guy threw the fire extinguisher at me, just point and click. So I extinguish it and it doesn't stop. And it's like, what the hell's going on? It's melting actively. I look back, my burner. So I had a nice stove top, but the burner locks were broken. And when I pushed the air fryer back, it turned the burner on. So essentially, I was cooking my air fryer. I was cooking a potato in the air fryer. It was a double baked potato. So moral of the story: don't use a don't use an air fryer in your stove. If not, your electrical stove. But that'll end there. That's my exciting story of how I got my current air fryer.
That was fun. All right, folks. That's going to be it for this episode. Y'all have a good night. We'll see you next week.